Increasingly, the financial service providers are looking at ways of delivering low-cost but sustainable financial services. The existing brick-and-mortar delivery mechanisms pose certain challenges, such as not being able to reach the last mile, having high establishment and operational costs vis-à-vis the value of transactions, amongst other challenges. In this scenario, M-banking is being seen as a channel that can reduce these challenges and enable the provision of low-cost but sustainable financial services to the poor and low-income households.
M-banking allows clients to use their mobile phones to do basic transactions through a very wide agent network, and thus brings financial services close to their doorstep. It also, for the banks, allows them to decongest their banking halls. Thus, a client goes with their mobile phone to an agent and there and then opens an account. They are then able to load e-money onto their phone. They hand over cash, and the agent SMSs that e-money onto the client's SIM. The client can then use that e-money either to pay other people, also on the M-banking system, or later to withdraw at other agents. And in order to withdraw, they will SMS the e-money to the agent's phone, and then the agent will hand over cash. I think we'll see over time, as bank account-backed M-banking solutions are rolled out, that more and more poor people will use them to regularly put a small amount of money aside into the M-banking wallet on their phone, and thus, after several months, be able to realize a useful lump sum. Because of the nature of M-banking, they can make those small deposits onto their phone almost every day. Very often the agent is only a matter of yards away from their shop or their home, and so it is relatively easy just to go there each day and put whatever small change they have onto the mobile phone. And I think we'll see that growing and more common. Indeed, my suspicion is that over time, agents will start going into the marketplace in order to collect payments, as is quite common with informal systems already. M-banking will provide the opportunity to replicate that type of system, but with a formal bank behind it. In India, MicroSave has been working with several M-banking solution providers in order to, first of all, understand the customer needs, the pain points, the opportunities that M-banking has to fulfill real needs and make managing money a much more convenient exercise for clients. In addition, MicroSave has worked to process map and analyze how best M-banking services can be delivered. And this was immensely valuable for one of our clients because it allowed them to show the central bank how control systems would be optimized. Finally, MicroSave has been doing a great deal of work on agent networks, understanding how best to select, train, and manage agents. And agents networks are perhaps the biggest challenge for M-banking nowadays. Getting a ubiquitous, effective, trusted agent network is essential to the success of M-banking.
EKO is one of the M-banking partners of MicroSave in India. EKO started in 2007 with an objective of extending banking facilities to the unbanked using mobile phone technology facilitated by a network of customer service points. Abhishek Sinha, CEO, talks about EKO's model, their experience, and the role of market research in developing EKO and its value proposition.
EKO's model is that EKO has been appointed as business correspondent to State Bank of India. What essentially we made a choice early on was to leverage the retail distribution in India. So we have about 15 million retail distribution, and the idea is to leverage this. The advantage of leveraging this is the fact that the low income people whom we are targeting right now, they go to such retail shops practically on a daily basis to buy their merchandise, day-to-day usage, grocery items, stuff like that. So the gentleman who's at the retail shop is already a trusted person. This whole physical interface is a comfortable interface for the customer. So we chose that as an option, as the choice, and the other choice was to go with the cell phone. And so today we have about 300 plus outlets in Delhi and 5 districts of Bihar where customers can walk in. Any of these outlets which are branded as EKO with EKO and SBI's branding, and can open a State Bank of India's no-frill savings account. It takes about 15 to 20 minutes for the store owner to explain the product, open the bank account for the customer, and get the bank account activated. And the customer can walk into any of these 300 plus outlets across any of these 2 geographies and do deposits and withdrawals with absolutely real-time acknowledgements over an SMS. The key to this agent network is the right agent selection, and we have ourselves gone through a lot of iterations of learning. There was a point in time where we were trying to enroll lots of agents, so it was absolutely a spray and pray kind of strategy for us. We're going for volumes of agents, but effectively we saw that also didn't work for us, and eventually we realized that for the agent to really deliver with efficiency, it was important for us to ensure the agent's economics. And once we figured that out, and with MicroSave's help, we were able to create agent selection, a pre-selection criteria scoring mechanism. So we were able to go through the rigor, getting the agents. So it was no more anecdotal, no more ad hoc. We got them to fill the forms. Each form was evaluated. And that helped us get a short list of the right agents. The subsequent step was training for us. Here again, we went through a lot of iterations. And now we, in a very clear language and with illustrations, we try and explain how this business is to be built for themselves. How does the economics build for themselves? The right training, the timing of the training has been also very important. So we saw that if we trained people well in advance, even before they went live, there was a tendency for them to forget. But now we make sure that when they train themselves, it's right the next day they go live. We give them about a day or 2 of a breather, and then we further support them on the ground with in-shop promoters. And we have found very, very effective results to this. So I think the 3 challenges for us was agent selection, training, and timing. And I think we've tried to adequately address each of them to a great extent. I think the key success factors is really how customer centric you are, and we also realized that we were the interface to the customer. It was not the bank which was interfacing with the customer, and hence the interface to the customer had to be really smooth so that the adoption did not have any barriers, and to be very specific on that, for EKO it meant the whole customer experience of getting themselves enrolled at that outlet, and adopting the technological interface, which in our case was the use of the cell phone. Market research is very important to understand the customers, to understand the customer's profile, to understand their expectations of the product, which further helped us position the product, form the communication, form the messaging around the product. So market research is very important. We've worked with MicroSave, we've worked with other organizations to absolutely understand the customer a lot better. I think we now feel a lot more confident just because of the fair amount of understanding we have with respect to the demography and the customers we try and cater to.
In the future, particularly here in India, I believe that M-banking will be central and necessary for effective financial inclusion. And indeed, as we find a business model that allows M-banking solutions to be delivered at scale on a profitable basis, I am quite sure that it will be the lead towards financial inclusion here in India. We already know that mobile phones are very ubiquitous. If poor people do not own a mobile phone, they will almost invariably have access to a mobile phone. This will allow them to use that instrument to access a formal bank account. And that represents a tremendous opportunity. And this is my belief that once the regulatory environment is made as robust but also as enabling as possible, we will see financial inclusion, really effective financial inclusion, within 5 to 10 years here in India.